Good evening, everyone, and welcome to this quick webinar on mastering FP&A reports from decisions with management reporting. So, I have been speaking to a lot of CFOs, and one thing that CFOs always complain about is that they're not getting the right kind of insights, right? So, which means that how do you convert that data into an insightful report? That is what is expected from a finance professional, from an FP&A professional today. So what we will do today is try and cover some of the popular management reports to see what usually CFOs or senior decision makers in the company are looking at. What types of reports do they look at to take certain decisions? Yeah, so we'll try and understand a little bit about management reports in this webinar. So first of all, thank you for your trust. You have taken out your valuable 60 minutes to spend time with us to learn something new. So thank you for your trust and pat yourselves on the back for taking action. You see, less than a statistic, a Harvard study says that less than 3% of the people take active action to develop their careers. And you have taken out that effort to spend time with us here for 60 minutes to understand more about FP&A reports. So you've already taken that step towards growth. So pat yourselves on the back for taking action. A little bit about us before we begin with. My name is Dhaval Patikar. I'm a qualified chartered accountant. I've also completed my general management program from Ahmedabad. Over the last 16 years, I've served as a CFO and a finance leader in India and in the Middle East across various industries like oil and gas, advertising and public relations, commodity trading, and software. I'm now the co-founder and lead faculty at FP&A Professionals Institute. I've mentored thousands of chartered accountants and finance professionals. Over the last 6 years, I've been an active online trainer, instructor, mentor. I've trained over 5,000 professionals on various topics like FP&A, finance business partnering, CFO career coaching, data storytelling, and much more. I've also had the privilege of being part of more than 10 CFO events and building a solid CFO community of 200 plus CFOs in the Middle East. I'm currently based in Dubai, so I have built a community of more than 200 CFOs over the last 12 months. I have gone in as a speaker, as a keynote speaker, as a panelist, as a moderator in various CFO events across the Middle East. Okay. I'm extremely happy to have joined by my co-founder, Asif. Asif, a quick introduction from your end.
Yeah, thank you so much for having me. Quickly about me, I have been working in finance and specifically in FP&A for more than a decade now. I started my career in audit back in 2010, then moved into FP&A in 2013. Started as an analyst and then gradually became a manager. My most recent role was the lead for APAC and India at one of the biggest edtech companies. So that has been my career. And in 2023, me and Dawal decided to start in a professor's institute. We had been doing training and coaching on the weekends for a while, and then finally in 2023 we decided to make this a full-time career. So this is a little bit about me. I've also written 3 books on finance and over the last I would say more than 3 years now, we have had an incredible opportunity to meet top experts across the world, right from North America to Middle East to Europe. And we try our best to bring not just my and Dhaval's experience and expertise, but experience and expertise of top FP&A experts to you. And we do that through our webinars, be it guest sessions, our podcasts, books, courses, certifications. So all that we do, we try to bring all the FP&A experience from top FP&A experts to you. And over the last 3 years, we have trained more than 5,000 students across all of these courses and certifications that you see on the screen. So that's a little bit about the institute as well. With that, I'll give it back to Dhaval and we'll talk more about the certifications at the end of the session today.
Thank you, Asif. By the way, I just got my copy of the data storytelling playbook, which is a third book that Asif has written. And I must say that Asif has done a phenomenal job with this book. So make sure that you all go and grab your copy today. It's available on Amazon. It's called Data Storytelling Playbook, which is an amazingly well written, well formatted, well explained book on storytelling, the most authentic book that you can find on data storytelling.
Thanks.
Okay, so what are we going to cover today? Over the next 60 minutes, I would encourage you to get rid of all the distractions and we'll be talking about a quick introduction about FP&A, why FP&A is becoming so much important, why is it gaining so much prominence, why CFOs are relying more on FP&A teams. And then we'll try and look at some examples why, what, and how, and what are the different types of management reports. Also, understanding our audience, right? Every audience requires a different kind of an approach. If it's a strategic audience, then what is the approach? If it's a tactical audience, then what is the approach? And then how do you build your management report accordingly? So we'll try and look at some aspects around that. And then finally, we'll end up with types of different reports. We'll show you some examples. We'll show you some reports that are normally used by companies. And finally, we'll end our talk with talking about certifications available in FP&A. Okay, so all in all, an exciting 60 minutes. So get rid of all the distractions and let's focus on what we are planning to share here today. Okay, so the first thing to start with is understanding the CFO's office, right? So a CFO's office is consisting of three broad areas, or a CFO is responsible for three broad functions in the company. One is the controller function, which is all about the compliance aspects, where you have your AP, your GL team, and they are responsible for your statutory audit, internal audit, getting the statutory filings done, tax filings done. All of those things are part of your controller function of the CFO's office. And then comes your treasury. Treasury is all about cash management, making sure that there is adequate cash in the company, the working capital is managed efficiently, there are adequate credit lines, and the banking relationships are managed efficiently. All of that is part of the working capital management aspect of, or the treasury management aspect of the CFO's office. And then finally, you have the FP&A function. While all of this is happening, somebody needs to keep an eye on the performance of the business. So that is where FP&A comes into play. And with activities like budgeting, forecasting, various types of financial analysis and commercial analysis, FP&A team supplies reports accurately and on a timely basis to CFO and other senior leaders in the company so that they can take informed financial decisions, right? Informed business decisions. So that is what is the main role of FP&A. So I hope you are able to kind of visualize the CFO's office. Usually, we are great with controller aspects if we are especially coming from an accounting background of our CA, CPA, CA. We already have a fair understanding of the controllership functions. But FP&A is something which is experiential in nature. It is picked up on the job. Unless you do get involved in pricing decisions, unless you get involved in commercial decisions, it is very difficult to learn. But we'll try and we'll try and explain to you some aspects about FP&A today as we go along. Okay. So there are three or four key components in an FP&A role, and these are the most common ones, no matter what kind of a company you go into, small, medium, large, right? So you have your budgeting exercise, which is like our annual financial plan, which is prepared before the start of the financial year. Now, let's say if 2026 is the financial year, then typically budgeting exercise starts somewhere in August, and finally by December, the budget gets approved by the board and uploaded into the system. And then there is forecasting. Forecasting is all about analyzing the ongoing performance of the business, where we are talking about actuals for some period plus the balance for the estimates for the balance period. For example, if I have completed my 3 months, Jan to March, then I will prepare something called as a 3+9 forecast. That is 3 months of actuals and 9 months of estimates. If I have completed till June, then I will prepare a 6+6 forecast, 6 months of actuals and 6 months of forecast. Okay. So that's how I will keep tracking my ongoing performance of the business to see whether I'm meeting my numbers or no. And then comes management reports at regular intervals, monthly, weekly, quarterly basis. You will be providing and producing a lot of management commentaries, management reporting packs, and submitting it to the CFO and to the senior business leaders in the company. And in order to execute these management commentaries, you will be involved in variance analysis. That is different kind of comparisons of numbers, actual versus budget, actual versus forecast, current month versus previous month, current year to date versus previous year to date, all of these different kind of comparisons, and ascertain the business reasons behind these variances. And then put that in your management commentary as to why a certain revenue has gone up or a cost has gone down, whatever. And then comes profitability analysis, where you dissect the overall company level profit and then try and understand where this profit is coming from. Okay, branch level profitability, product level profitability, business unit level profitability, regional level profitability. All of these different kind of components you dissect and try and diagnose where are those pockets of efficiencies that I can leverage to improve the overall company level profitability. So that is what is profitability analysis. So I hope you're getting the three main pillars of budgeting, forecasting, and management reporting or management commentaries. Okay. That brings us to the third pillar. I mean, today we'll be focusing in this webinar only on the third pillar, that is our management reporting, okay, or the management commentaries bit of it, okay. With that, I'll quickly hand it over to Asif to cover a little bit about what management reports mean and how they can be structured.
Thanks, Saval. So do you want me to share screen or you want to
Yeah,
continue?
I can stop sharing screen.
Okay, let me share my screen. Okay, let me know once you are able to see the screen. Okay, perfect. Okay, so quickly before I get into the details of management reporting, I'll talk about what it is. Okay, so a lot of people confuse management reporting with your financial reports, which is your statutory reporting. So the three most important financial reports that typically companies prepare is your income statement, balance sheet, and your cash flow statement and the notes to accounts. So these are different from your financial reports. Okay. So these are typically called as MIS or departmental income statement, okay, used by everybody inside the organization. So these are usually not published externally, okay, used for decision making inside the organization. It tends to create a common language between the people who are referring to these reports or people inside the same organization. Okay, compared to your accounting reports, which follow the accounting standards or the US GAAP or the IFRS, these management reports do not have to follow that. These are more presented in a very logical sequence or manner, the way how your business is structured. Okay, so it usually follows the structure of the business, and basis the structure of the business, you create these reports. Okay, after looking at hundreds of management reports, here are some of the good quality of, I would say, the seven qualities of good management reports that we could quickly summarize. Okay, usually reports that are shorter, they are comparatively more preferred compared to longer reports. So one pager is something which usually fits in one slide or one page and can be easily consumed. Okay, so typically management reports should not be more than, I would say, one or two or three pages. If it is more than that, then most likely you are sharing a lot more information which is required in many cases, except it is a requirement from somebody who's in the headquarter, or somebody who's requiring to asking you to follow a particular format. Okay. It should be decision focused. Each and every line or each and every metric on the report should lead to some or the other information or insight that gives the management an ability to take decisions. It should be easy to understand. Okay. A lot of these reports are not sent to or not consumed by finance people. Okay. A lot of these reports are used by non-finance people who are on the sales, marketing, operation side. Okay. They may not have as good understanding of accounting as we accountants or we finance professionals do. So it should be easy to understand. Consistent look and feel. When you do these reports over and over a period of time, say you're sending the same management report on a monthly basis every month, then you will be expected to have a consistent look and feel. Okay, because people will get used to looking at some numbers at certain places in the report, and they may not like it if you change that format every month when you send it. Okay, so it should settle down, and once you create the report a couple of times or you send it a couple of times, after that it should not change a lot unless it is required. Okay, simple language, you already discussed that. Frequency, it could be either monthly, quarterly, or more frequently, it could be on a weekly basis. Some reports are shared on a weekly and even daily basis. These days, we have the ability to create dashboards, and those dashboards can be updated daily or even on a real time basis. Okay, so the frequency can depend on the requirement of that particular information or that particular report, and could be anything between monthly, quarterly, weekly, daily, or even on a real time basis. In terms of the accuracy, it has to be as accurate as possible at the time you are creating that report. Also, you should be able to figure out, okay, if somebody asks you how did you get this number, you should be able to tell them where is the source coming from or where are these reports coming from. Because typically it could happen if there are two different sources for the same data or the same numbers. You might have one source and the business team might have another source. So it is important for you to know exactly what is the difference or what exactly the number you are presenting, how is it different from some other source which the business team is referring. Okay, so these are some of the qualities of a management report. Now what we'll do is we'll take a look at the audience. So in management report, it is equally important to understand your audience. And let me ask Dhaval to cover this section.
Thanks. So cool. So you can bring the first one. So generally you will have three different types of audience, right? So one is your strategic decision makers or senior professionals in the company. They could be your VPs, your GMs, the CEOs, the CXOs of the company. There they expect a strategic dashboard. They don't have too much time, so they need it high level, goal focused, and actionable insights. What do you want them to do, right? So don't give them information, give them insight, and also what is the decision that you want them to take. Okay, so let's say, for example, your revenue is down, you want to run some promotion. So do you want the approval for promotion? What is the impact of that running that promotion? What is the anticipated impact on revenue of running that promotion? So that needs to be captured in your dashboard, where they can look at that dashboard or a report and take a certain decision. So keep it high level and goal focused, and try and avoid detailing into that. And the next set of members could be, your next set of stakeholders could be your middle management or planners or managers. They have time. they have time to get into the details of it. So they would definitely like rich comparisons, focus on interactive data where you can give them drag and drop dashboards, buttons or different kind of scenario analysis. So you can give them that detailed data because they like to get into the details of it, and they might want to also understand the details behind what the numbers are, right? So highlight your analysis, in-depth analysis, what is expected at the mid-management level. And then comes operational or tactical stuff. These are not decision makers and they don't have to take any decision. They don't have a quarterly, a medium term, or a longer term view. So you just need to tell them what needs to be done. If it is red, you stop. If it is green, then you go ahead. Something very simple and actionable indicators. Focus on the exceptions, right? So this is what, if there is an exception to this, then you come to me or report to me. So this is how your dashboard should be designed for tactical stuff, because they don't have the mind space to think strategic or to think in the medium term or longer term. So tactical dashboard is something which will be looked at the operational level. So these are the three different types of management reports that you will be focusing on. If it is strategic, then focus on strategic dashboard, mid-level managers, analytical dashboard, and tactical staff, then you give them a operational dashboard or a report. Yeah. So these are the different types of audience.
Okay. Next, what we will do is we'll take a look at some of the common management reports. Okay, we will not be able to cover all of them in the limited time that we have today, but what we can do is we can talk about some of the most common ones. Okay, so let me quickly take you through some of the common management reports. Okay, you have your month end and your quarter end reports. Okay, we'll take a look at an example of this in the next slide. Then you have something called as the flash report. Okay, we'll also talk about this. Then there's something called as the risk and opportunity tracker or risk and opportunity slide that you usually put it into your different management reports. Okay, so you use this slide inside your month end report or your quarter end report or your budget presentation. Okay, so this is an important or I would say a very, very frequently used report in FP&A or a tracker used in FP&A. We'll take a look at that example as well in the next few minutes. Okay. Then there are some performance management frameworks, okay, which companies use, and balance scorecard is one example of the performance management framework. We'll take a look at an example of the balance scorecard also in some time. And then you have something called as objectives and key results. Okay, this is another performance management reporting framework. Also, we'll take a look at this in some time. Okay. These are some of the most commonly used management reports and performance management frameworks. Apart from these, there are specific business reports that you send to different departments or different functional teams and the business teams. So there could be a report you could be creating for the sales team. It could be called as the sales report, right? There could be a report you could be preparing for the marketing team. It could be called as the marketing report or the marketing ad spend report or return on marketing spend report. There could be a report you would be creating for the HR team. It could be the salary and the headcount report. Okay, so there would be specific reports for specific teams that you would be creating apart from these, but these are some of the common ones that you would be and you would end up doing anyways in any role. Okay, so with that we'll get into the first one, which is the month end report. Okay, what I'll do is I'll try to show you some examples that I have from our masterclass and CDFPA program, and basis that we'll be looking at these reports. So I'll be quickly sharing reports in the next 10 minutes. Like I'll be opening one of these reports and I'll be quickly walking you through those reports. So first, let's start with the month end report. Okay, so here is an example of a month end report. Typically, what you do is you have your previous month performance. So for example, this is the month of November, which is ending, right? So in the first week of December, you will have the November performance. You will have the actuals for November. You will compare that actuals with the budget. Then you will have the most recent forecast that you had reported last month, okay, or last quarter, and you will also compare your actual versus the forecast. So you have 2 points of comparison. One is versus the budget and versus the forecast. Okay. These are, I would say, the standard comparisons. Apart from these, you would see percentage growth or a year-on-year growth column. That is something that you could add to this. You could also do a November year-to-date performance or a YTD performance. Okay, so these are some of the common column sets that you see in your management report or in your month-end report. Okay, so these are your column sets. And on the left-hand side, you have your revenue streams. So in this case, the company has three different products. So these are the three different revenue streams: jewelry, watches, and eyewear. Okay, and then you have your top 5 or top 6 expenses, which usually covers the 80-90% of your expense base. Okay, so you have your COGS, R&D, marketing, and advertising, which is the top 5 expenses in your on your P&L. Okay, so on the top you have the income statement, which is your revenues and your expenses. It is not a very detailed income statement. It is a very high level income statement with your top three revenue items and your top five expense item, which usually covers 80-90% of your department revenues and expenses. Okay. And at the bottom, you have the drivers or KPIs, which are related to your revenues or expenses. For example, your volumes or your number of units sold is directly correlated to your revenues. When your volumes go up, your revenues will also go up. Okay. So this is how a typical month-end report is structured. And on the right-hand side or at the bottom, you typically have commentaries or you try to give business reasons for the variance between the actual and the budget and the actual versus forecast. So this is how typically a month-end report would look like. Okay, the formatting could be different. However, this is the essence. Some people like to have the budget column in first and then the actuals and then do actual versus budget. However, more or less it looks very similar in most cases. Okay, so this was the month-end report example. The next what we have is the quarter-end report. So quarter-end report is very similar to month-end report. It just covers a bigger or a larger period. It is for 3 months. So everything you will have for the quarter one or quarter two. So this will be Q1 actuals or Q2 actuals or Q1 budget. So it'll be very similar in terms of the presentation. However, because it's a quarter end, usually there are some more additional content or additional sites that are a part of the quarter end report. So sometimes the management would like to have the last quarter highlights and lowlights and key learnings of the quarter that has just ended. Okay. So that they can identify any changes or adjustments that are required for the next quarter. Also, they may want to look at the forecast for the upcoming quarter. Okay, so that is also could be a part of your quarter end report. Okay, as I mentioned, risk and opportunities could be also a part of your quarter end report. Okay. For companies that follow OKRs, they may want to include the balance scorecard or their OKRs in their performance man or in their quarter end report. Okay, so these are typically the contents of a quarter end report. It's usually a 8 to 10 slide presentation, including your financial and the operational summary, and then some analysis on your revenues and expenses, and your highlights, lowlights, risk and opportunities. Typically, it's a 10 slide or 12 slide presentation. Okay, so that was on the quarter end report. I'll keep going on and I'll continue presenting more reports. So the next one on our list is the flash report. Okay, so flash report typically are of two kinds. One is where you're doing a frequent reporting in between the months. Okay, so it could be a daily or a weekly report. Okay, which is for a very important KPI or a very important metric, which the senior management wants to look on a very frequent basis or on an ongoing basis. Yes, that is one kind of flash reports, and then the other kind of flash reports are the ones that you start at the end of the month when you do not have the actual numbers closed by the accounting team. So what you do there is you have your estimate for the month end, which might be 25 days of actuals and then 5 days of estimate, and that is also known as a flash report. So typically, what you do is you start doing the flash reports at the end of the month, typically on business day -5, business day -4, which is typically at the end of the month, and you continue doing that till the time your month end numbers are available. Okay. So let me show you. Okay, so can we see the visual format of a report? Okay, so let me share one of the examples of a flash report. Let me see if I have one. Okay, so again, examples what we are showing here, it may not be possible for you to directly just pick and implement it in your organization because these reports are, as I mentioned, internal reports and they are very specifically tailored depending on the requirement of the person who is going to look at that report or consume that report. Okay, so ideally you will have to sit with the person who is going to be the end user of that report and then tailor that report accordingly. What you can do from here is you can just take a look at how a flash report is done or how a quarter end report is done, and based on that you could take some ideas and then implement that same in your organization, but it will have to be tailored for your specific organization. Okay, so let me bring up a flash report that I used to create for one of the edtech companies. Okay, so here what had happened is the global marketing lead wanted me to create a flash report that she wanted to review on a weekly basis. Okay, and in that company, what we had as our top KPIs were these KPIs: the new registrations, top payers, the cash collection number, the revenue number, the retention number, and the average revenue per user. These were the top 6 KPIs that the company was tracking, and the global marketing head wanted me to present that on a weekly basis, and she specifically wanted me to have the regional breakup for the different regions inside the organization from US, EMEA, LATAM, APAC, and all of that, those should total up to the global number. Okay. So this is what I had created. I had the last week actual numbers, which was reported last week. Then we had a month to date section. For example, today is let's assume today is 15th of November. So this would then be the performance, actual performance till the 15th of the date. Okay, so this will be 15 till 15th November month to date, and the comparison of the similar period in the last year. Okay, and at the end there was a full month estimate. So 15 days of actuals and then 15 days of estimate. How would the month end or close look like? And this was the weekly report that we used to publish to the marketing side, right? So if you must have noticed, right, this is not something you could directly use and pick. So you'll have to identify your KPIs. You will have to identify, do you want the report at a global level? Do you want it at a regional level? Do you want it all in one sheet? What are the column sets that are required based on the discussions? Okay. Once you create that report, then you could send it a couple of times and make some changes based on the feedback, and then you could finalize that report and keep on sending that, or you could automate that in Power BI and keep on refreshing it on a weekly basis. Okay, so this is one of the examples of the flash report. Again, I'm repeating, you cannot just take this and implement it. This is just one example. You will have to do tailor it. You'll have to tailor it for your business, for your use case. Okay, so that was the example on a flash report. Let me go back to the presentation. Okay, so these are periodic snapshots of your key operational or financial data. Covers a shorter period than a month. It could be a weekly or a daily report. It bridges the gap between the month end reports. Typically one pager, as we already talked about that. It should provide critical business insight. This is typically what the flash report does. Okay. Next, what we have is something called as the risk and opportunities tracker, which we had already seen in the list of important reports. Okay, so let me show you example of how that Excel tracker looks like. So you have these columns for both risk and opportunities, and you list down each of the risk items or each of the opportunity items. Okay, so here is one of the examples of the risk item. So the company was about to lose one of its major clients. Let's say the client name was X. Okay, so loss of client X is a risk to the organization because this represents 20% of the business or 20% of the revenues for the company. Okay, so you track that. What is a profit center? What is a cost center? What is the description? Attrition of client X due to service delivery issues. What is the business team doing to make sure that the risk is mitigated? So they are monitoring the client closely and trying to make sure that the client continues with us. Okay. What is the account line? It is a revenue line. Is it a new or a change? Was this known before, or this is something which is a new risk or a known risk? Okay. What is the probability of this risk materializing? So in this case, it says 70%. Okay. Was this included in the previous forecast or not? Yes or no? Okay. And then the amount. What is the amount of that? What if this client goes away? Then we lose out $200,000 of revenues. Okay. So based on the probability, you could decide whether you want to make an adjustment of this risk into your forecast. Okay. If it was a 10% probability, maybe you may not have made that adjustment in the forecast. But if it's a 70% probability, you may want to take some adjustment in your forecast based on this particular risk item. Okay, included, excluded in the forecast for you to be able to track. Had you already made this adjustment in your previous forecast? If you had, and if this risk say goes away in the next month, you could then add back to your forecast. Or if this risk materializes, then you could continue that adjustment in your forecast. Okay, so these columns are more for you to be able to track the adjustments to the forecast that you make based on these risks and opportunities. Similarly, there's an opportunity example. So this was during the COVID period. Travel and meeting expenses, cancellation of physical conferences due to COVID. This was already known and 100% probability. So this was already included in the forecast. Okay, so like this, you would list down 20, 30 risk items, 20, 30 opportunity items, and then present whenever you are doing the quarter end report or the month report one slide which summarizes the top 5 risks or the top 10 risks into the presentation, and that would look something like this. So you maintain the Excel tracker for your reference for you to be able to quantify and make adjustments to the forecast, and then you summarize that in the report which could look something like this. Okay, so this is on the risk and opportunities. Okay, now what we'll do is we'll take a look at some of the performance management frameworks. One of the popular performance management framework is the balance scorecards. So before the introduction of balance scorecards, typically in the 1990s, companies used to only run after the profitability metrics or on financial metrics, which was profits, return on investment, return on equity. Okay. After the introduction of balance scorecards, it was seen that companies who focused on the overall development or overall growth of the companies usually need to focus more than on the financial metrics. So these were the four pillars that were identified by the balance scorecard: the customer, the internal business processes, the learning and development, and the financial metrics. Okay, so not just the financial KPIs, but also looking at the customers, looking at the internal business processes and learning and development. Okay, so what do you do typically in a balance scorecard? Let me just show you an example quickly. So you have those four pillars: the customer focus, the internal processes, learning and knowledge, and financial. For each of these pillars, you identify one or two objectives. Okay. And for each of the objectives, you define a measure, and then you decide the target and you compare the actual performance versus the target. You also decide who's going to be the owner or who's going to be responsible to deliver this particular target. Okay. So let me take one example. Okay. On the customer quadrant, you have one objective which is says on time delivery. Okay. So delivering the product to the customer on time is one of the key objectives of the company. Okay. How do you measure this? You measure this by tracking the delivery failure rate. Okay. What this says is if your delivery failure rate is lower than 1%, then it is green. Okay. If it is higher than 3%, then it is red. Okay. So the target of the company for this year is 2%. If it is able to achieve 2%, then it means that it is doing okay. Okay. However, if it is able to bring it below 1%, then it would be terrific, right? That would be a green. Okay, so you typically assign color codes or red, amber, green based on the target and based on the actual performance. Okay, so a lot of companies use this and they have balance scorecards for their teams, for their departments. A lot of the senior management also have their balance scorecard. For example, the CEO might have a balance scorecard. The head of sales or head of marketing might have a balance scorecard, and typically you would track their performance based on this. And many times a lot of the incentives bonuses are also dependent on the fact of they achieving the targets as per their balance scorecards. So this is one of the popular performance management frameworks. Let me go back to the slides. Okay, we looked at this example. Okay, another popular performance management framework is the OKR, or the objective and key results. So this was introduced by Google in 2003, 2004, somewhere in early 2000s. And once Google started using this very effectively for a couple of years, a lot of other tech companies in the US also started adopting the OKR methodology. Okay, so let me show you an example of how does the OKR framework look like. Okay, so this is a fictional company or a fictional organization. However, the I would say the format is the actual format that is used by organizations. So this is the actual format that we have picked, but we have replaced the numbers with the dummy numbers. Okay, so how does it look like? So you have the mission of the company on the top, which is followed by the top three goals or top five goals of the organization. So in this case, the goal of the organization is for the next quarter, or the quarter four, $100 million of revenue, 6,000 new customers, and 50% retention rate. Okay. What do you do in the OKR? You have this team wise or department wise. For example, this company has three different departments: the certificate department, the monthly subscription department, and the annual subscription department. So this company level goal will be given to each of the departments, and this $100 million of revenues, you can exactly see how much revenues will be done by the certificate department. 30 million is to be done by the second department, and 45 million is to be done by the third department. Okay. Now inside this also you have clear objectives that are mentioned. Okay, to be able to achieve 25 million of revenues and 3,000 new customers and launch 10 new courses, which is the goal of this particular department, you will need to get 1,000 new customers from the SEO channel. You will need to get 1,500 new customers from the paid media channel. Okay, responsibility of the SEO channel is of the SEO head. The responsibility of the paid media channel is of the marketing head. Okay. Launching 10 new courses is the headache of the content head. Okay. So this is the way in which you have the company level goals and then the department or the team level goals. One difference or one distinction between the balance scorecard and the OKR is that OKR is fairly transparent across the organization. So you would see the company publish the OKR on the internet, and you would be able to see the OKR for each and every department and every person in the organization. There are also tools, OKR tools, that are available which are used to track the actual versus the target for the OKRs for the teams and for the departments. Okay. Compared to balance scorecard, which used to be more siloed or which is typically not very transparent, a balance scorecard of one department may not be visible to the balance scorecard of the other department. The targets of the India CEO may not be visible to the targets of the Australia CEO. Okay, although both will be visible to the APAC or the regional CEO. So this is one example of another performance management framework, which was the OKRs or the objectives and key results. Okay, so I've tried to share as many examples of the common management reports in the time that I had today. What I'll do is I'll stop sharing my screen and I'll go back to the presentation. Let me see what is there next. Okay. So let me stop sharing my screen and we'll now take a look at the certification that I was mentioning in the beginning. Now you want to share your screen?
Yes, Asif. I'm just doing that. Give me a second. So, after understanding the different types of management reports and looking at some examples, I hope now you have some idea about how management reports look like, and you realize how amazing it would be to learn all these high-paying FP&A skill sets and the grab opportunities in the FP&A function, work closely with the CFO and the senior business leaders in the company to help them take certain decisions. We have done extensive surveys with CFOs, and whatever our interaction with CFOs have resulted in. So we have been able to identify five critical skill sets that CFOs today are looking for in their finance teams. And these five skill sets are: first is your core FP&A concepts, your budgeting, forecasting, management analysis, different kind of variance analysis, commentaries. All of these are your core FP&A concepts. Sorry, just give me a second. Yeah. Then comes your financial modeling, which financial modeling not specific to where we're talking about revenue models, understanding business models, scenario planning, sensitivity analysis. All of these things are your financial modeling skill sets. Then comes data storytelling. Okay, it's not only important how you analyze the data, but it's equally important how you communicate this data to the business team, because they don't understand 10,000 lines of Excel sheets like how we do. Right? So that's why converting it into a proper story with a narrative, with an action title is what is the data storytelling. And then comes business partnering, your ability to collaborate with various business teams in the company. Could be HR, business development, pricing team, legal team. All of these happens through your understanding of the business, your business acumen, and your ability to build strong cross-functional relationships. So that is where business partnering comes into play. And then finally, last but not the least, using the latest developments in AI and technology to be far more efficient and effective in your finance function. These are the five core skill sets that CFOs today are looking for in their finance team. So what we have done is that, like we mentioned, as I both quit our full-time high-paying CFO and FP&A lead jobs to establish FPI. We have developed our own certification program. It's called the CGFPA program. It's called Certified Global FP&A Professional Program. So the CGFPA program is a global FP&A certification built and delivered by CFOs and FP&A leaders. It has 10 extensive modules, which we will talk about it in a while. Everything through practical case study based real life like situations, real life like data set, so that you are ready for taking on any FP&A role in your career. And you'll always be part of a global alumni community. CGFP program has been taken by students with more than 25 countries so far. You'll get personalized sessions with a finance career coach, placement support, your resume review, your interview preparation, mock interview preparation. Sometimes FP&A roles ask you for solving a case study and returning it within 2 days. So those case studies support. We have our own portal as well. It's called fpnajobs.com. So all of that support will be given from our end. Monthly Q&A sessions where you can ask questions directly to the faculty if you have any. And then external speaker sessions, top FP&A experts, tool providers, CFOs come to FPI for guest sessions every month. And we try and bring some unique speakers every month to our alumni so that you're continuously updating yourself. And all of this happens through seamless online access to LMS. Live sessions are conducted on Zoom, right? So very easy access online from wherever you can take it from the comfort of your home. CGFA has 10 core modules. I'll let Asif cover the first five modules on the left, and then I'll talk about the modules on the right.
Thanks, Awal. So let me talk about the introduction to FP&A first. So this is what FP&A looks like in large companies and startups. What is your role going to be as a FP&A analyst or FP&A manager? How does a FP&A calendar look like? What is going to happen in week 1, week 2, week 3, week 4? So along with case studies of how you practically implement FP&A in organizations. This is typically what is covered in the introduction to FP&A module. Then we have our core budgeting forecasting module where we cover different budgeting methods, including your bottoms up and the tops down budgeting, the incremental zero based budgeting, your activity based budgeting, the way you do budgeting in a traditional format versus the rolling forecast. All of these methods are covered along with the entire step by step building of a budget from scratch, right from the revenue budget to the cost of goods sold budget to the production inventory, materials, labor. So the entire marketing R&D budget. So you see examples of each and every sections of the budget. And also then there is a capstone project which will cover the end-to-end budget for one organization using a large data set. So that is what typically is covered in the budgeting module. And forecasting is your different techniques that you use in forecasting. Or some of the techniques that are covered are your driver based forecasting, the forecasting that you do using statistical models like moving averages or regression or time series. Then there is forecasting based on qualitative or judgmental basis. The different terminologies that you use in forecasting like seasonality, phasing, trends, all of that is covered in the budgeting and forecasting module. Then you have a very interesting module on AI for finance and FP&A, which is one of the hot favorites these days, where we cover a lot of our examples and case studies that we usually do in Excel. We try to show you how do you do the same thing in using AI tools like the common LLM tools like Copilot, ChatGPT, Claude, and also there are specific AI agents which are used for FP&A and finance. Okay, how do you do build a forecast using the AI, or how do you do financial modeling using AI? How do you create a dashboard using AI? So all of that is covered in the AI for finance and FP&A, and it has been evolving very fast over the last 1 year. So we've been constantly updating that almost every quarter. Okay, so that is on the AI for finance. Management reporting, some of the glimpse you already saw in today's webinar. So along with the common reports, we also cover the variance analysis part. Okay, so how do you do variance analysis using different frameworks like the 5I method or the DERP framework? Profitability analysis is also covered in detail. Recharges and allocations using real life case studies and examples. So that is a little bit of the management reporting module. And then there's my personal favorite, which is financial modeling for FP&A, where we teach you how to apply financial modeling best practices and techniques for FP&A day-to-day use cases. How do you build revenue models? How do you build expense models? How do you do scenario planning and sensitivity analysis? How do you do cash flow forecasting? All of that using Excel for financial modeling. So that is a little bit on the core modules that you see on the left-hand side. I'll let Dhaval cover the other ones, which you see on the right.
Thank you, Asif. One thing that is common in your FP&A role is that you will be dealing with large sets of data and different set kind of financial data, operational data, and you need to know your way to navigate through this large set of data. So that's where we are covering tools like Power BI and SQL so that you are able to deal with these large sets of data. We don't claim to make you a Power BI expert, but at least we take you to a level where you are comfortable using these tools in your day-to-day roles. And then comes financial analysis. Financial analysis typically is interpreted just with ratio analysis, right? But financial analysis is far more than ratio analysis. So there are different types of analysis that you do: margin analysis, mix analysis, price volume variance, horizontal analysis, vertical analysis. All of these concepts are covered with real life cases so that you are able to support the CFO's office with deeper analysis. And then comes your storytelling and presentations module, storytelling best practices. How do you build dashboards? How do you build presentations? What details to use at what point in time? How do you build your narrative, your story? All of that is covered in the storytelling and presentations module with practical examples. Then comes strategy. See, as and when you start becoming senior in your company, your senior management will start talking a certain strategic language. Okay. And now at that point in time, you cannot use strategy very loosely. So that's where we cover all the popular strategic tools that are used by senior management and also show you the linkage with how FP&A can contribute to those strategic tools. Okay. So that's what is the strategy module. And then comes business partnering. So business partnering is where you are collaborating with different business teams. We cover 7 to 8 real life cases where we are covering collaboration with HR, business development, pricing team, customizing a few reports for a CEO. All of these different kind of examples that Asif and I have been through in our careers, we're trying to cover in the business partnering module as well. So all in all, 10 solid modules, nearly everything that you need for FP&A to be successful in FP&A. Don't just think about CGFA as course. It is our lifetime of 20 years of experience that Asif and I have put together in this 6-month compact program, right? So that's CGFPA for you. Okay. Now, what is the eligibility and how will you get the CGFPA award? For doing the course, you need to have at least a bachelor's degree or a global equivalent in finance, accounting, or business. Or alternatively, you may have your professional qualifications like CA, CPA, CMA, ACCA, or any equivalent accounting qualification of your respective country. Okay. We don't claim to be a substitute for these qualifications, but in fact, we are a supplement to these qualifications. We are also accredited by CPD UK, and you can claim continuing credits in your accounting qualifications as well. Now, how will you get the CGFPA certificate? 3 things. One, you will have to attend the live classes online, which is every Saturday for 2 hours, just for 2 hours. Okay. You need to at least attend 50% of the classes live. And then you have to submit a capstone project, which is an end-to-end budget presentation for a CFO. All the guidance, all the instructions will be given to you on that. Don't worry about it. And once you submit these two, once you meet these two, then you will have to pass the examination, which is a 2 hours multiple choice questions kind of an examination, which is a proctored examination. And once you pass the examination with minimum 50% passing marks, you will be awarded the CGFPA certificate from FP&A Professionals Institute. We are an autonomous body at this point in time. We are not connected with any other accounting body of any respective country. Okay, I just want to clarify that. The ROI for a course like this, I leave it to your imagination. The course fee investment in this program is USD 1795. You also have an option to pay it over 5 months. The duration will be for 6 months, where a total time commitment of at least 3 to 4 hours a week is required. 2 hours we meet live every Saturday into classes. In the classes, we want to maximize the time on discussing practical aspects, case studies, simulations, and discussions. Whereas we will also give you some pre-reading where you'll have to spend about 60 to 90 minutes of your own time to go through the pre-reading materials, to go through some pre-recording videos, right? So that you are prepared for the upcoming live classes. And all of that will be notified on the WhatsApp group, the batch WhatsApp group that you will be added to. The next cohort is starting on 10th of January 2026. 10th of January 2026 is when we start. The date that you need to remember is 30th of November 2025, which is end of this month. That is when the second round of applications are closing. One round of applications have already closed. The second round of applications are closing on 30th of November 2025. Asif will share the brochure and the application link in the chat box. The application is completely free. Make sure that you go ahead and fill in your application so that our team can check the eligibility and reach out to you. We are also happy to share with you a demo lecture if you want to go through some demo lectures. So all of that, our academic counselors can reach out to you only if you fill the application form. So make sure that you fill in the application form, and then our team can reach out to you with the eligibility. Again, then don't just take our word for it. There have been tons and tons of testimonials, right? Many of them have been able to land FPA roles. Many of them have been able to implement a lot of things that they have learned in their existing FA roles, right? And there have been tons and tons of stories. Feel free to reach out to our academic counselors, and they can share any of our alumni numbers as well. You can talk to our alumni, understand from them how the course has been beneficial from them, right? And do your own due diligence before enrolling into the program. That's what I would say. Again, just a quick reminder that the second round of applications close on 30th of November 2025. Please fill in your applications before 30th of November 2025. Application link is in the chat box, and our team will check your eligibility and reach out to you with the current ongoing offer. And
Right.
thanks, everyone. Bye-bye.